Good morning, Jags. This is Fahad. Today is Wednesday, October 1st. It's the start of brand new quarter, so let's get going. Okay, two real quick thoughts on two semis this morning, one of which in which we currently have an open position, and that's MRVL Technologies. First of all, quick background. Overnight session, we saw pretty strong gains across the board in China as well as in Europe, where the semi sector was performing rather very strongly. If you look across the board, there have been some positive developments and some positive news flow in key stocks that are in 5G space. So, for example, Dialog Semi, which had a positive initiation note from an analyst a couple of weeks ago, it was performing very strongly over in Asia. If you look at ASML, which is the Netherlands-based semi, that stock is about to gap higher by about 3 to 4% in pre-market. So that had some positive news flow overnight as well. So I think the overall setup for semis stocks in the United States is to rather outperform the market and run quite strongly. Now, there are some key players in this space that are my favorite when it comes to particularly 5G areas. One of them is MRVL Technologies, in which we currently own November 40 call options. This stock closed at 39.70 and it's going to open higher by about 1% in pre-market. But I expect on this breakout, and if you look at the short-term chart, you will see exactly what I'm talking about. I expect on this breakout, this could add to gains as the day progresses, either today or maybe even continuing tomorrow. Look closely. This is a resistance where the stock has been rather consolidating for quite some time. Look for this to clear this $40 resistance, and I think it can possibly get to $41 to $42 per share with a nice breakout rather very quickly. We already have the November 40 call options, but I wouldn't be surprised if we see some pickup in short-term weekly call options as well. I will also point to you that looking at some of the recent commentary came out, just a reminder, Marvell Technologies in the first week of September announced that its largest customer, 5G customer, which is Samsung, announced a $6.6 billion deal with Verizon to build its US 5G network. And this is the biggest customer of Marvell, increasing its capex by $6.6 billion to build a 5G network for the biggest telecom provider in the United States. All of the base stations that they'll be buying to fulfill this order are going to come from Marvell Technologies. And so as a result, this brings the order growth for the company, in my opinion, much higher than what the street is expecting. And this order was announced only in the first week of September. And I don't think it's fully baked into the consensus view. That's the most important thing fundamentally you need to know about Marvell. Second semi that's on my watch list for a technical breakout is QRVO, symbol QRVO. Similar kind of a technical setup. MACD has stabilized and is starting to show some early signs of a bull cross. RSI has stabilized and volume profile continues to remain quite decent. If you go over here, once again, you will see the setup. How this thing looks for a potential breakout in very, very short term. So here is a very simple draw a line of resistance. If this thing starts to clear about 132 to 133, I think this could spike as high as 140 in relatively short amount of time. So keep an eye on weekly call options activity as well as intermediate term call option activity, whether it's October, November, or December or January. In terms of fundamental outlook for QRVO, as you all know, we discussed this in chat room last time when the company reported earnings on July 29. This was an absolutely blowout quarter, and I was bullish going into that earnings. We gave you the preview in webinar at that particular time. Looking at the actual recent notes from analysts and the street, Bank of America is very bullish on this stock. And on September 14th, or September 13th rather, there was a note out in which they mentioned that QRVO positively pre-announced September quarter and guided December quarter above the street estimate. The upside was driven by stronger than expected mobile demand, with new September quarter mobile outlook of $720 million, which was 12 to 13% above the consensus view of $640 million. And so as a result, this was a material beat. I think stock has been building in energy because the technicals were overbought after the sharp jump post earnings. Now it has spent enough time, 2 months consolidating. So I would expect a breakout in QRVO as well through about $132 per share. That opens the door for 140. That's it from me. Jay?
Morning, Fahad. Taking a look at orthopediatrics, symbol KIDS.
Oh,
This
your
is a
favorite
name.
stock.
Yeah, I own it, own the stock. A name we've obviously covered many times. Stifel was out recently after hosting management meetings with the company's CEO, CFO, and COO. Management noted that there is ongoing positive volume recovery in the United States, and the US makes up 81% of kids' total revenue, while outside the United States, it's a little mixed here and there. But turning back to the US, management highlighted the improving monthly trends as the growth profile returned in June, continued in July, and then according to management was up double digits in August. Now, two product launches were also talked about in these meetings. The first one is ApiFix, which was a product that was actually acquired back in April, so relatively new. And this is used to treat patients with scoliosis. Management said everything is progressing well. They noted early positive clinician feedback and positive launch progress. More specifically, with 20 IRB or institutional review board sites already opened, OrthoPediatrics noted 6 to 7 of these sites have received full approval to start doing surgery with the ApiFix system. The company also highlighted early, highly positive clinician feedback from these early adopting sites about the short procedure time and the simplicity within the procedure. ApiFix is currently approved to do 8,000 US procedures annually, which according to Stifel, over the long term could represent $1 billion of potential revenue opportunity. And then lastly, another product called Orthex, which is a system used for deformity correction. Management highlighted that this transaction from last year, in addition to all of the other product launches that they have, has expanded the portfolio from covering 65% of all pediatric orthopedic procedures to covering 85% of all procedures, which is dramatically higher coverage than any other company in the space. So fundamentally, everything sounds good. I would say technically, this is a volatile name. As you can see from the chart, you had quite a sell-off, and basically from the middle of August up until recently. And I couldn't find any specific headlines. But if you sort of expand it to a weekly chart, this is just par for the course. The stock does tend to sell off, but it has always rebounded. So I would expect the same going forward.
Couple things. So first of all, I think a lot of our clients are going to be very happy to get this update on this stock, because I know firsthand a few names, at least from a client list, that own this position, and quite often I get emails from them asking what is the next update. You're right, on a weekly scale. This has been basically a very simple trend of higher highs and higher lows. And the chart tells us that right here in front of you. This is a 3-year chart. And the volatility that is in this stock in short-term basis, when it pulls back, quite frankly, it's simply a function of this being a small cap. It's about $900 million in market cap, and small caps tend to have higher beta, higher volatility, and so knockout effects sometimes with the market sell-offs and whatnot tend to be a little bit more extreme in a small cap. So I think it's simply a function of that. On the point that you made about this ApiFix, one question I have. Tell me again, if I heard this correctly, $1 billion in opportunity with this new product launches over the course of how long of a period of time?
Well, the commentary that I read was essentially this product is currently approved to do 8,000 US procedures. And Stifel essentially says, yeah, it represents $1 billion of revenue over the longer term. They don't give an actual,
Yeah.
5 years, 10 years. They don't give that.
The reason why I asked is that because this company is just looking at trailing 12-month revenues is only $70 million, $70 million. I mean, I really wonder how big is this opportunity, even if we assume a fraction of what Stifel is talking about, and then how quickly we can get to that point. The product launch has already happened, so there could be something big here that's simply not into consensus view. So we got to monitor any kind of channel checks around this product launch going forward every single month, see if we start to see, some uptick and whether the consensus starts to come in. This is how usually happens. You don't usually see consensus jumps in right away and start raising forward earnings estimates after an important product launch. It takes them time, and then, after the stock starts responding. This is a very good update. I love it. Thank you very much. Chronicle.
Morning, Fahad. I first brought up Celanese in our morning conversation back on August 26th, symbol CE. And today I have an update on them as well as the broader chemicals market in general. Morgan Stanley was out with a 53-page coverage on the chemical sector, saying they expect a strong recovery in chemicals for the remainder of the year and throughout 2021. It's a very long note, but if I were to summarize it down to the most important points, first off, they believe supply growth has peaked in 2020, and they're expecting supply growth to decelerate to only 4.2% in 2021 and 3% in 2022. And so pricing is going to be a tailwind starting next year. Like they're forecasting ethylene spreads to rise from $250 per ton currently to $400 in 2021 and $450 in 2022 versus consensus at $360. Meanwhile, the chemical sector, having been in a downturn for 20 months now, they're starting to see a V-shaped demand recovery, particularly in Asia, which is consistent with the early recovery phase of every new business cycle following a global recession. Because one of the first things we tend to see at the start of a new cycle is an upturn in Asian demand in chemicals and semiconductors, because we can't produce anything else without those two things. So chemicals and semis are what lead the global economy. And right now, Morgan Stanley is predicting a sharp inflection in Asian demand for chemicals, and they are forecasting an acceleration from slightly negative this year to 6.6% growth in 2021. But I have to emphasize that they think Asia is going to see a much stronger recovery than the US. So this recovery is not equal, and the rising tide isn't going to lift all boats. And so the note says we still want to be careful about chemicals companies that are too exposed just to the US and not enough to Asia. And as such, they're forecasting a 72% earnings growth for Asian chemical players, which is much higher than their forecast for the American and European players, which is also partly driven by lower oil prices and input costs, which helps boost the competitiveness of the Asian players. So again, not going to be an equal recovery across the world. So that's Morgan Stanley's note. Meanwhile, from my own observation, what I gather looking at the latest manufacturing PMI reports from China, Japan, South Korea, and Southeast Asia, as well as the industrial production reports and regional export data, by far, the strongest sector that stands out to me is automotive manufacturing and automotive parts. So if I want to play the chemical sector, I would favor a chemicals company that not only has major exposure to Asia, but also high exposure to the car makers. And so coming back to Celanese, as I mentioned back in August, which has more than half of sales exposed to automotive and Asia and Germany, their management has said that auto in Asia and Germany has recovered, and consistent with Morgan Stanley's note, they are expecting acetyl chain pricing to start inflecting next year as a reflection of less supply growth and improving volume demand. The other company we can look at is Huntsman, symbol HUN, although this is more of a construction play rather than automotive. Going back to Morgan Stanley's note, they're expecting a sharper than expected recovery for Huntsman's key product, methylene diphenyl disocyanate, or MDI, on lower global supply, but also stronger demand from construction. And so they're upgrading Huntsman to overweight.
Very interesting update. As you were talking, I was pulling some additional data. I think, first of all, going back to your view and this view that comes from Morgan Stanley, the key chart is this chart right here. And this has to do with the growth rate. There is truly what the street is expecting is a significant V-shaped recovery going from 2020 to 2021. In fact, in terms of the percentage year-over-year growth rate, the 2021 print for a lot of these chemical companies you talked about could, based on this chart, based on the demand curve, could reach the highest level going all the way back to 2010, 2011, which was the moment when we had similar kind of a V-shaped recovery as we're coming out from the Great Recession, GFC. And so that may happen very well in 2021. And if that happens, naturally, this means that there's a lot of multiple expansion for a lot of these stocks that need to happen before we see earnings expansion, so they could continue to march higher for the next 6 to 9 months. Another thing I want to quickly point out is that, and this basically builds upon a bullish view that we covered in webinar as well. As you were talking, Westlake Chemical, WLK, just this morning, I just happened to be actually looking at a note that came out from Barclays, indeed. And if you look over here, this is the Barclays note about the U.S. chemical, about caustic and methanol, and they talked about exactly the same thing. You mentioned Huntsman. Here's Barclays. As we wrote in an upgrade of Huntsman's last week, chemical volume recovery continues to outpace expectations coming out of the second quarter earnings, and positive earnings revisions are likely to continue into third quarter earnings. And they go on to say about Westlake Chemical over here that the right over here, and as well as for Olin as well, which is another company, that they believe, we think there is upside risk versus fairly negative near-term sentiment in the stock today. Westlake PVC and polyethylene prices have been meaningful positives into the quarter, more than offsetting caustic soda declines and negative hurricane impacts. The point here is that this all basically paints a similar directional picture that you just pointed out about CE, and I think these positive earnings revisions will continue for quite some time. So interesting update. Great stuff, as usual, quality content. All right, gents, we're going to stop over here. Jaguars, thank you very much, and we'll see you in the chat room shortly.